Hello, Mr. Bandyopadhya, and thank you for joining us today. We're talking about the real interest rates today. And the first thing I want to ask you is that are the current deposit rates able to beat the inflation?
Yeah, Ruchika, yes. I think after quite some time now, we are seeing the deposit rates are higher than the inflation rate, which means the real rate for the depositors are positive. Now, typically for calculation of that, we need to look at inflation 1 year down the line, which by Reserve Bank of India estimate is 5.3. That's the inflation estimate for fiscal year 2024. And as we speak, you will find most of the banks, including the mainline large banks, are offering anything around 7.5% or even more. For senior citizens, even 8% or even more. So it's a plain arithmetic. 5.3 is inflation. If you're earning 7.5, so your positive return is 2.2. Of course, you can talk about the tax what we pay. Because depending on the tax bracket, whether it's 20%, 10%, 30% or no tax, you need to pay tax on the return. But when we discuss the real rate of return, we don't calculate the tax. So minus tax purely from the point of view of is inflation adjusted return. Yes, what we are seeing at this point of time for the fixed deposits, the depositors are in the money, positive.
What is it that the real interest rate should be based upon?
Well, I think what you are hinting at, what should be the benchmark? I think
What should
that's
be
the question. Yeah, what should be the benchmark it should be linked to? Well, there are various theories. Former Reserve Bank of India Governor Raghuram Rajan spoke about 364-day Treasury bill. Now, I think there are various point of views. Should it be the Reserve Bank of India in Indian context, the policy rate, or 364-day Treasury bill, or something else? There is no real answer as such, but I personally feel that when we are calculating for, the real rate of interest, I think we need to consider all the benchmarks available, right from repo rate to 364-day Treasury bill. Everything, like for instance, repo rate is this point of time 6.5, and if you're earning 7.5 or 7.75 interest rate on your term deposit, then again you are positive. Again, there's a tax part of it, but that we don't consider when we consider the real rate of interest. So real rate of interest at this point of time, by any benchmark, whether it's 364-day Treasury bill or the Reserve Bank of India policy rate, are positive. And as I globally, the central bankers have been talking about the real rate. Our central bank governor, Shaktikanta Das, also after the presentation of the last policy early February, he also spoke about that we are seeing the rates in the positive territory. So that's the objective of all the global bankers, US Federal Reserve, you call it, I mean, any global banker. And we are there.
Where do you see the deposit rates going from here?
Have we seen the end of the rate war? Probably not. I would like to believe there is still possibility of rates going up. Because there's a fierce battle on the deposit rate of something which is unprecedented. The bankers who have 30, 40 years of experience, they have been in the industry. They are saying that they have not seen this kind of pressure on deposits. So typically what happened, the banking system in India, liability, you take it for granted. You will keep on getting calls for home loans and auto loans and personal loans. But for deposits, rarely, because depositors are taken for granted. For the first time, you are seeing that the bankers are wooing the depositors with higher rates. Of late, there's a new instrument coming up. It's a non-callable deposits, which means you are locking yourself for 2 years or 3 years. You're not allowed to take the deposit back under any circumstances. Normally, when you are having 1 year or 2 year deposits, for emergency, you can break the deposits. You need to pay some penalty, but you can take away your money. But now bankers are using that non-callable deposits also and paying you some 25 bips more. Have we seen the end of the rate war? I would like to believe no. It could go up even further. And a related thing, you have not asked me, but I am telling you. Have we seen the end of rate hike? Probably no. It's still wide open. There could be All depends on the inflation numbers and what happens in US. What does US Federal Reserve do at the next FOMC meeting? We need to wait and watch. Yeah, as we speak, it's very difficult to say, but I would like to believe, looking at the inflation trend in India, it's a sort of 50-50. There could be yet another rate hike in April. And yes, as a corollary to that, the commercial banks have no choice but to hike their deposit rates. So if you have your money, I mean, be cautious. It's not a forum for personal finance, but don't put all your money in one basket right now. Stay liquid. You get probably a better opportunity a month down the line.
So, Mr. Bandyopadhya, you hinted that deposit rates could go up, but as far as the overall rate hike goes, it's 50-50. Good piece of advice coming our way, that don't put all your eggs in one basket. Thank you so much for joining us today and sharing your insights.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.